So SilverBullet, shifting gears a little from a conversation around pharma, we exist in a completely parallel universe, which is fundamentally about helping big brands to generate improved revenues from investment in and the use of data and technology to improve marketing outcomes. So fundamentally, we're in the business of marketing transformation through the smart use of data. There are parallel businesses that are on the market. S4 Capital, for example, would probably be one of the bellwethers of this type of organization that we occupy, the space that we occupy. Our clients, as you can see on the right-hand side, tend to be significant brands, often global. Heineken is one of our largest clients, with whom we work within over 15 markets now. Jägermeister, Marks and Spencer's, ITV, to name a few. We launched the business in 2016. My background was leading some of the biggest marketing services, and then latterly data organizations, latterly a company called Axiom. And my co-founder was a part of a significant technology exit to the Oracle business called Bluekai. So through that lens, really, we were seeing that these brands weren't well served in this space of marketing transformation through the smart use of data. That's what we launched SilverBullet into. But in 2020, we launched a flagship product. So we have services that we offer to brands, but in 2020, we launched our own product, which was a seismic moment really for our business. And I'll talk more about that. But 4D is designed to respond to what our clients are facing now, which is new regulation around data privacy, and how that manifests in some significant ways that changes how their organization need to use their own data, but also deploy new technologies to meet those new privacy regulations and customer expectations. And we listed in 2021 on the AIM market. Next slide, please, Nick. So what we do, as I say, we have two sides to our business. On one side, we have our data-driven transformation services for brands that you can see along the bottom of the slide. Heineken, as I say, is a great example where we help Heineken to develop what can they do with their first-party data, the customer data that they own. How can they use it in a privacy-safe way to unlock new value from their marketing investments? Often that will relate to media, for example. How can they use media in a smarter way that gets them better return on investment through applying their own data sets, their own first-party data sets? We help them to do that from an advisory perspective, but also then working with big scale technologies like Salesforce, like Adobe, like Oracle stacks. We'll help those companies like Heineken to choose the right technology for them, and then of course integrate that technology into their organization. So we are a hands-on services business, not just a consultancy business. A lot of our business actually comes through our relationships with companies like Salesforce. Salesforce sells software. We're a business that they take, we go with Salesforce to help them to make that sale and then implement that technology on behalf of the client. So essentially, as I say, we help businesses unlock the value of their data through the application of lots of different tech. And it was through that lens, really, in about 2019, 2018 was a pivotal moment in the industry, I should say, when GDPR, which I'm sure affects everyone's business, GDPR became a very big component of how organizations need to organize themselves around privacy surrounding their data sets. And the big question became really, well, how does that affect, we were answering that question all the time, how does that affect our business, our clients' business? And the big thing that was popping for a lot of our clients was that GDPR was going to require a change in the way that advertising can be targeted. And advertising was currently being targeted through the use of what's called a cookie. I'm sure you've been plagued by them across any of your internet usage, but fundamentally a cookie is a small data set that enables brands to look at your behaviors, you not as an individual per se, but your browser. Where have you spent time online, and therefore being targeted with specific advertising specific to that particular cookie behavior. That cookie's going away. So the fundamental shift in the market as a consequence of GDPR was the decline of the cookie. And actually Google have announced now that by the end of 23, there'll be the final browser set that will make the cookie outlawed. So that cookie going away fundamentally changed the whole ecosystem. That was a big question that our clients were asking us. How can we solve for the post-cookie world? Heineken need to spend, for example, around approximately $1 billion a year will be spent in media and buying advertising to influence consumers to buy their brands. That's a big deal. That's a fundamental issue that connects to their sales. So cookies going away was actually an existential moment in terms of building brand for them. So their question to us was, what can we do to replace the cookie? And actually, we looked into the marketplace as an advisory business and found the technology that was being provided was pretty poor, actually. Not poor in the sense of it didn't deliver what it said it would do, but it wasn't really geared up for the future. And that future was all about video, because the big shift in the way that clients want to spend their money now, of course, is a shift away from TV, which is becoming very fragmented, into video online. So we set about building out a proprietary product called 4D, which effectively solves for that problem, targeting video at scale in a post-cookie world in what we call in the industry the programmatic ecosystem. What that means is the automated ecosystem that agencies on behalf of clients use to buy that video. So we've built a product that sits in that ecosystem that can generate predictable recurring revenues for our business alongside our core services business. Next slide, please. So as I've mentioned, really, the macro is significant. You know, this is a pivotal moment in the industry. So we talk about a privacy first post-cookie era, and we're built to deliver into that for services and products. But to give you a flavor for the scale of the market, you know, COVID, like I think a huge number of industries, has actually acted as an accelerant of transformation. So this has shifted consumer behaviors around shift from conventional TV, for example, into viewing on over-the-top channels. I'm sure your own TV habits have changed, whether it's viewing on apps, Netflix, Amazon, and so forth. But that has a fundamental shift in the way that advertisers need to behave to connect with their customer base or new consumers. COVID accelerated that. Data-driven business transformations has accelerated as a consequence. If consumers move, brands need to move with them, right? And that's all been driven by this shift in regulation. So the whole digital marketing world's been turned on its head. That's what we've responded to, and that's where our opportunity lies. And that's where we're seeing all of our growth, is in that accelerated data-driven business transformation. The market we operate in is around a $147 billion market, which is described as programmatic display ad spend. Included in that is some video, but a huge amount of video spend is coming into that space. That market is set to grow significantly over the coming years. But more importantly, you know, all advertising is now digital. 50% of it, sorry, 58% of it, the majority, I should say, of advertising is now digital. 58% actually of the total, according to Group M statistics, is that is the proportion of spend in the digital space now. So we live in a digital era, which is privacy first and post cookie. That's what SilverBullet solves for in terms of its 4D product and its service offer. Next slide, Nick. So what have we done? We successfully IPO'd the business in summer, at the end of June, supported by some significant UK fund managers. We're deploying those funds to improve our organizational structure, bring in new talent, and focus on our 4D product, really driving that 4D product. The value of the 4D product is massive scale opportunity, huge opportunity for recurring revenues, and obviously an opportunity with our current client base to cross-sell, but also we're opening up new markets through partnering with media agencies. Media agencies are the point at which most clients still use media agencies, so they're the point of transaction. So we work with big scaled media agencies that enable us to get 4D into multiple clients simultaneously. We're also using those funds to look at several partnerships and M&A opportunities. Next slide, please. So revenue-wise, first half success, we've been on numbers. We're 30% up on half last year, 13 new big wins in the services side of our business. And now, as I say, we're deploying significant investment into our 4D outcomes engine, our 4D product. We've also invested in our US office, as I say, to address those media agencies as well as develop our client relationships. And investing in new talent, we brought in a new COO to bring us that infrastructure and that organizational infrastructure from Publicis Group. Kristen Kelly was the president of their global president of their digital and technology business across Publicis Media. Kristen joins us really to drive that rigor into our organization, and as we scale into organizations like Publicis. Publicis is a very good example of one of those media agency networks that I was describing, are the point of transaction. We're also bringing in the hen's teeth, if you like, of talent. Data strategy is a much sought after capability, and we're ensuring that we are an attractive place to bring that talent into in order to serve our clients both on the services side and with the 4D product. Next slide, please. A little bit of detail to give you a flavor of where our growth is coming from. We win contracts with big clients, I say often. That will be driven by our partnerships, our global partnership with Salesforce, for example, who takes SilverBullet into significant procurement processes with big global clients that want to buy their software. A good example of that would be ITV, Dolce & Gabbana and Heineken, are consolidations around the Salesforce platform, actually. ITV is a very good example of a big focus area for us right now, which is around broadcasters. We help broadcasters to transform their organization in order to put more video inventory into the market that clients want to buy, that also 4D makes more attractive. So we like to be right at the heart of the matter by serving not only ITV, but 5 other broadcasters globally, actually, that are going through a similar transformation process. So we're right at the heart of this pivot point between traditional broadcast and online video in a post-cookie, first-party driven era. So 4D makes that inventory even more attractive. So we're right at the heart of that transformation. As I mentioned, Salesforce, we're a global partner of. There's a big shift in that activity for next year as Salesforce retire a number of their products and transform their clients onto new products. We're helping them to do that process. A lot of our clients will be doing that process, so it keeps giving in terms of its transformation journey. And we're extending our service offering with current clients, so we're selling our current clients more things more often, which gives us material visibility on our full year revenues. Next slide, please. 4D is a big engine room for us next year. 21 was a year of getting it in market, getting the first revenues over the line, and getting some big brands using the product, which I'm pleased to say we've done. You can see some logos on the right hand side, but we're working with lots of the big brands in the world. 4D, if 4D's business model is very simple, we take a proportion of spends through our platform by adding value and improving the outcomes of the performance of the media. We're able to demonstrate stickiness with our clients that gives us a recurring revenue of a proportion of that spend on every dollar spent in both display and video media. We're doing that with big entertainment companies, big technology companies, big financial service companies, you can see on the right hand side. As I mentioned, agencies are really important to us. We're working with all the big 6 holding companies. A holding company example would be Publicis Media, WPP. We're in conversations with all of those guys, but we're focusing down our efforts also onto one particular joint venture that we created 18 months ago with a business called Local Planet. And Local Planet is a network of over 50 now independent media agencies. We signed a joint venture with those guys, and we're rolling out the product into every one of those agencies now, starting with the big players. And we recently RNS'd 2 of those new contracts that we're rolling out. Pilot is the biggest, in fact, one of the biggest agencies in Germany, full stop, but it's the biggest independent agency, spending multiple billions of euros in this space of media. A large proportion of that, of course, will shift into the digital space as per the statistics earlier, and a large proportion of that will be market addressable for 4D. So Pilot, MediaTrack's another example of that in France, and you know, we are focused on that rollout, so watch that space. MIQ is an independent agency with a huge number of clients in the programmatic space. We're working with those guys on some very clever ways of using our data in a new way. So not only are we doing transactional work with agencies, we're also doing strategic work to help them to develop their data capabilities. They're a big scale player that we'll be doing more work with as we go into 22. So they're good examples of traction points, both brands and agencies. Lots of new features coming through, but it's all about video. So our video product really connects Q1, Q2 this year. Lots of baseline work with those types of clients and agencies I mentioned. Google's created a bit of confusion around where the cookie's going, but frankly, for us, we don't really care. The cookie is just an accelerant point. Actually, what we deliver for our clients is just better, smarter advertising. We're just going back to some good advertising basics that are applying new technology and data to just deliver better outcomes for them. That's why we talk about video outcomes. So Google's extension to the cookie has been a bit of a pain in terms of a narrative, but fundamentally doesn't change our opportunity or our strategy. And really, we're focused on landing those big strategic partnerships like Local Planet that give us flywheel effect scaling opportunities. Next slide, please. So to step back a little and then take some questions is really about what's happening in this business. Why do we feel super confident about 22? Firstly, we always start with consumers. Consumers, privacy and personalization. I don't know if you've experienced this as yourself as a consumer, but privacy is becoming more important. You know, it's a dinner party conversation, dare I say it, you know, about cookies, about your data being used by Facebook in a nefarious way, if you're that way inclined. So those are the sort of conversations that we see coming through at scale in terms of business impact. It's also that shift of consumer behaviors away from traditional TV to online viewing, whether that's online on screen in your front room, OTT as we would describe it, or if it's video on a screen that we would traditionally associate with the internet, like we're talking to each other on now. But what consumers expect is authentic, contextual, relevant advertising. That's what we do. That's what I was talking about earlier. The cookie itself is interesting, but what we're really about is how do you bring new technology and services to generate authentic, contextual, better advertising. And that's what both sides of our business do for our clients. So digital transformation is the key to growth for all of the businesses that we work with, and indeed most consumer brands, right? They need single views of customers. They're driving to an e-commerce environment, and first mover advantage is no longer about shifting to digital. It's about the strategy and migration speed of the use of the data, right? So data strategy and martech growth is the sweet spot that we're in. It's about infrastructure and automation and attribution. There's some big gorillas out there like Salesforce. We team up with them, but we're also a new startup participating in that with our own product 4D, which is embedding into established martech ecosystems. So we're joining the dots with products like 4D, which gives us the opportunity to generate recurring revenues that give us positive valuations in the future. Most of our clients aren't happy, not with us, but with the fact of where they are in this journey. And so we see investments that are set to just dramatically increase in 22 in the martech area. So for us, we are in this sweet spot between martech and the advertising industry. The media market is where we measure ourselves. 4D is a media product. It improves media outcomes, as I said, with display advertising and video advertising. That market's set to continue to tear on. You know, this year alone, 26% pure play digital growth from Group M statistic. Increasing spends on data and digital transformation. Some massive numbers are being played into that. But fundamentally, you know, we're able to capture parts of it on the services side, and then a large part of that digital budget on the 4D side. And as such, we've got significant pipeline for this post-cookie era, privacy first products and services. That's what we're doing. The market's coming our way, and we're super excited about 22. Next slide, please. That's it. Thank you. Any questions?
Can you tell us about the rollout in the US? How's it all going there?
Yeah, fantastic. So lots of traction. I was there myself last week, actually. So we've got fundamentally the team infrastructure put in place. The market is very attracted to our product. So we've got plenty of pipeline and trials and tests. A lot of the brands that you saw that I referenced to 4D are actually in the US. It's now about deploying for sales teams to address that demand. Watch this space for some, you know, for some of the more punchy agency relationships that we're talking to at the moment that are in trial. But we're really confident about it. We feel good about the US market. We feel that our product and the feedback we're getting is the product is differentiated, which is what it's really all about. video is the differentiation point. And the US market is obviously the biggest market of all. So that's why we focused on it. And I'll look, confident in the progress that we're making.
Thank you. How quickly can you grow revenues with 4D? Obviously, the market cap against existing revenue base appears quite high, so you will need material double-digit growth for a couple of years to justify that.
Could you say that again, Nick? Sorry, I missed that.
Sorry, I'm talking too quickly. How quickly can you grow revenues with 4D? The market cap against existing revenue base appears quite high, so you will need material double-digit growth for a couple of years to justify that.
Yeah, no, I would respectfully disagree about our market cap, but I'd say our services business alone is a very valuable asset, and is very rare. So we're seeing significant growth in that side of the business. So I think that's that is a valuable asset in itself. But yes, 4D growth is aggressive. It's a very simple product to use as a transaction end user, right? So let me explain that. There is no barrier to entry. There's no integration required. We've done all of that work within the product. So as an end buyer, so if I'm a buyer of media on behalf of Heineken sat in a media agency, it's very easy to switch on. That buyer in that media agency also isn't just solely responsible for Heineken. They're responsible for multiple clients, multiple brands across their agency. So these are programmatic media buyers within agencies. By influencing around one or two clients, it opens up a huge number of different brands. So the agencies that we've recently contracted with will have over 200 clients, for example, in Pilot. So we have access through Pilot to over 200 brands. That gives us confidence that we can build scale fast. And as I say, the addressable market is significant. It's a $140+ billion market, of which we don't need a huge market share. So we're confident that we've got good relationships with the buying points. We're confident that we can build the 4D business quickly, albeit that it's not trivial to make these relationships work. So they take time. There's no doubt about that. But once you have those relationships in place and you become what we call a preferred partner, then the opportunity to scale is very significant.
Great. Got a question here about the contracts. So what does a typical contract look like in terms of length? Is it lump sum up front, or is it steady cash flow throughout the life of the contract?
It does vary. I mean, we have, for example, with all of our significant global clients on the service side, we have a master service agreement. So that's a framework agreement that then, for example, with Heineken, different markets can then use that master service agreement to engage us very quickly and easily. So it's easy to switch on. So we have, I think, I forget off the top of my head, so I'll keep the numbers lower than I think they are, but it's certainly 12, we're working in 15 markets, but there's certainly 12 individual contracts that we have with different Heineken countries. So those are contracts for specific tasks over a period of time plus a retainer. So it does vary over time, but we have a master service agreement that binds the two companies together. So that tends to be the norm for most of our services clients. And with 4D, really, it's about commitment to each other as an agency to product. So the agency would give a commitment. We're not asking for financial commitments at the moment. That's not the stage the product's at. That will come in 23. Right now, it's a commitment to work as a preferred provider of the product. So we become a preferred provider, which gives us access to all of their clients. That contract then relates directly to them to be able to put any of their clients through our platform. So that tends to become what we call predictable recurring revenue. It's not a SaaS model, but it's predictable recurring revenue in the sense that once a client uses our product and gets improvements, they tend to stay with us. So we're finding that already, hence why we feel confident in that type of model, which, as you say, with the right appropriate growth, gives us some pretty interesting multiples in the future.
Great. I think you've really answered this last question, which was, how do you price 4D? Is it a pay per number of view on the site?
No. So 4D it's not about what happens on the outcome. It's about what we call a cost per thousand. So there is a very established business model in the advertising market of value being created between the dollar being spent. So $1 being spent into buying video online, for example, through a programmatic media platform. We sit above the programmatic media platform. It's called a demand side platform. We sit above that platform, and we improve the outcomes that platform then delivers through choosing the right video advertising space for that particular client. Right, so we improve the outcomes. We take a proportion of the spend. So we take between 3 and 5% of the dollar through 4D into that demand side platform. So for every dollar, we take 3 to 5% as a cost, what's called a cost per thousand in the industry. So it's a clip on every dollar spent when they use 4D as a way of improving outcomes. That's model one. So we call that our self-service model. That's where the client does all of the work themselves. The agency, to be precise, excuse my language, the agency does all of the work themselves on behalf of the client. We also have a managed service business, which is a slightly different model, where we do all of the work for the agency if they don't have the expertise that's required. So often a smaller agency will use us, and we'll then buy all of the media as well as use 4D. That's a slightly different model. And then also we are doing deals with some of the more sophisticated buying points about licensing them our data set. So that would be a simple license on a monthly basis. So you've got the self-serve model of CPM, you've got a managed service model, which is where we buy the media as well as use 4D, and then you have a licensing model. Most of our revenue over time will come from self-service. So to keep it simple, that's the core model to understand our business.
One final question for now. You touched on the agencies. So when are 4D revenues likely to flow from the agency agreements? Is it dependent on the agencies selling the 4D service to their clients?
Yeah, there's a bit of that. We're doing it already. So there is already revenue flowing in Q4. So we are now, I'm pleased to say, billing our first revenues as per our plan. So, you know, that gives us material confidence in our end year numbers. You know, we're doing it. So the way that it works right now is that the agencies that we've contracted with will be selling through to some of their clients, but often it's in their gift to make these decisions themselves. They don't fundamentally have to sell it to their client. It just needs to be run on campaigns that then can demonstrably show an improvement in outcomes, which then slots it into what we call an agency workflow. So that workflow becomes fixed in the gift of the agency, not just having to go and sell line by line to every client. So as I say, getting good outcomes on one client often opens up multiple clients within the agency. And that's why testing and really making sure we're embedded in the workflow is really important. And that does take time.